Here is the part nobody wants to say out loud at the dinner table. It is not the unemployed, the addicted, or the irresponsible who make up most of the new faces in this country's homeless shelters. It's working people. People with a paycheck 2 weeks ago, people with a lease, a car payment, a grandkid's birthday coming up. People exactly like you, or your neighbor, or the man who used to wave at you from his porch every morning on his way to work. Most American households are closer to the edge than they think. Surveys keep finding the same thing year after year. More than half the country is living paycheck to paycheck, and roughly 1 in 4 people have nothing set aside at all. Researchers who study this for a living have found that for a lot of families, the actual cash on hand, divided by what they spend in a normal week, comes out to about 10 days between a paycheck stopping and the bills not getting paid. That is the part that should sit with you. Not 3 months. Not even 1 month. 10 days. This video isn't here to scare you for the sake of scaring you. It's here because if you understand how this happens, which door it usually comes through, how fast it moves, and what the warning signs look like, you can see it coming for yourself, or for someone you love, while there's still time to do something about it. We're going to go through 15 of these doors. 15 specific documented ways that an ordinary, housed, working American can end up without a roof in less than 30 days. We'll count down from 15 to 1. Some of these will surprise you. A few of them might describe somebody you already know. Let's start. Number 15. Losing a job with no severance. Here's what most people don't realize about a layoff. The job ends on a Friday, but the money doesn't stop owing anybody anything. Rent is still due. The car payment is still due. And unless you work in New Jersey, which is the only state that requires it, your employer owes you nothing extra on the way out the door. Unemployment insurance sounds like a safety net until you actually need it. It usually replaces less than half of what you were making. It's capped. Even in generous states, there's a ceiling on the weekly check, and it's rarely enough to cover rent on its own. And it doesn't show up the day you lose your job. There's an application, a waiting period, sometimes a few weeks before that first check lands. So picture the math. Last paycheck Friday, bills due the following week. Unemployment check, if everything goes smoothly, 2 or 3 weeks after that. For a household with 10 days of cushion, that gap is the whole ballgame. In 2025, job cuts in this country jumped by more than half over the year before. Most of the people losing those jobs weren't offered a severance check at all. They went from employed to unemployed in the time it takes to clean out a desk. This one doesn't make headlines. It's just a gap between income stopping and bills not stopping, and a household with no room to absorb it. Number 14, a rent increase with no warning. Most states put no limit on how much a landlord can raise rent at lease renewal. Not 5%, not 10%. There's no ceiling at all in most of the country. A tenant who's been paying the same number every month for 3 or 4 years opens the renewal letter and finds it's jumped $200 or $300, maybe more. No announcement, no phase-in, just that one letter. For someone on a fixed income, and we'll come back to this group more than once, there's no flexibility to absorb that. Social Security checks don't grow, because the rent did. Researchers tracking this have found a clear pattern. As median rents climb, homelessness climbs right along with them. The choice left to the renter isn't really a choice. Pay the new number and run short on something else. Or go looking for a cheaper place in a market where the cheaper places are already gone. Either way, the clock the landlord just started is the only one that matters now. Number 13, a car accident or breakdown that ends a paycheck. For a huge number of working Americans now, rideshare drivers, delivery drivers, home health aides who drive between clients, the car isn't just transportation. The car is the job. No car, no income. None. A fender bender that totals an old sedan. A transmission that finally gives out with no money to fix it. Unpaid parking tickets that end with the car towed and impounded with a release fee the driver can't afford. Any of these can end a paycheck overnight with no notice and no warning. Outreach workers who count homeless populations in cities like Los Angeles hear the same story again and again. Someone loses a job and the car goes right along with it. Or the car goes first and the job follows. This one gets missed because it doesn't look like a housing problem at first. It looks like a car problem. By the time it becomes a housing problem, rent is usually already late. Number 12, A frozen or drained bank account. This one can happen to someone who did nothing wrong at all. Identity theft drains an account overnight. A glitch or a dispute freezes money that's sitting right there, untouchable for days, while a bank sorts it out. Or a court order on an old debt, medical, credit card, whatever it was, lets a creditor take a chunk out of a paycheck or an account before the money ever reaches the person who earned it. Wage garnishment can take a real bite, often as much as a quarter of what's left after taxes. For someone already living close to the line, losing that much before rent is even paid can be the difference between making it and not. The timing here is completely outside anyone's control. Nobody chooses when an account freezes or a garnishment order clears. It just happens, mid-month like any other, and the rent money is gone. Number 11. Incarceration over a minor matter. This isn't about people committing serious crimes and facing serious consequences. This is about a few unpaid tickets, a missed court date, a probation technicality, something that lands a person in jail for a handful of days, sometimes less than a week. A handful of days is enough. The job that didn't get a phone call doesn't hold the position. The rent that didn't get paid because nobody could get to a bank doesn't care why. By the time someone gets released, they can come back to find the job gone and an eviction notice taped to the door. Researchers who study homeless populations have found that close to 1 in 5 people entered homelessness directly from some kind of institutional stay, and a short jail stint for a minor infraction makes up a real share of that. It's a hard pathway to spot from the outside because the public version of the story is they went to jail. The real version is they went to jail for 4 days over a fine and lost everything because of it. Number 10. Doubling up, then getting asked to leave. A huge number of people who are technically homeless right now aren't sleeping outside. They're on a relative's couch, a friend's spare room, a sibling's basement. It's called doubling up, and it's the most common form of hidden homelessness in this country. Most of the homeless children identified by public schools each year are living this way, not in a shelter. Here's the part that belongs on this list specifically. When that arrangement ends, it tends to end fast. There's no lease, there's no 30-day notice requirement, because there was never a formal tenancy to begin with. Researchers studying this in California found that people without their name on a lease got, on average, about 1 single day of notice before they had to find somewhere else to go. 1 day. Not a month. A day. A fight, a new boyfriend or girlfriend moving in, a landlord finding out there's an extra unlisted person in the unit, and threatening the host's own lease. And when it ends, the person who'd been staying there often has nowhere lined up at all, because the whole point of doubling up was that they didn't have anywhere else. Number 9. A disability or injury that stops work. A fall. A bad back that finally goes out. A diagnosis that makes the physical demands of a job impossible. For people who do manual or physical work especially, the body is the business. When it stops working, the income stops with it. Disability benefits exist, but the approval process takes a long time, often many months, sometimes longer if the first application gets denied and has to be appealed. That gap between the injury and the first disability check is a gap with no income in it at all, while rent, food, and medication keep being due on schedule. Among people who end up homeless, about half say their age, their health, or a disability is the reason they're not working. This pathway tends to build slowly, while someone tries to push through pain or keep working reduced hours. Then it turns sudden the day the body simply will not do it anymore. Number 8. A natural disaster with not enough insurance. A fire, a flood, a hurricane that takes the roof clean off. These events get news coverage, but what doesn't always make it into the coverage is what happens in the weeks right after, once the cameras leave. A lot of homeowners are underinsured without realizing it until the claim comes back lower than the cost to rebuild. A lot of renters have no insurance at all because renters' insurance is optional and easy to skip when money is tight. Government disaster assistance exists, but it's capped at an amount that often falls well short of replacing an actual home, and it's meant to be a bridge, not a full rebuild. The Los Angeles wildfires in January of 2025 destroyed around 16,000 structures and displaced more than 100,000 people in a matter of days. Some of those families had good insurance and recovered. Others did not have enough, and recovery for them has looked a lot more like an extended stay in a motel or a car or a relative's living room. This is one of the few pathways on this list that can happen to someone who did everything right, paid the mortgage on time, every month for 20 years, and still ends up with nowhere to live. The disaster doesn't check anyone's credit score before it hits. Number 7. A landlord selling the building, or simply not renewing the lease. In most of the country, a landlord doesn't need a reason to decline to renew a month-to-month tenant. They just need to give the legally required notice, often 30 days, sometimes 60, and the tenant has to be out, no matter how long they've lived there or how reliably they've paid. This happens constantly when a building changes hands. A new owner wants to renovate and re-rent at a higher price. A long-term tenant who's been paying a modest below-market rent for a decade suddenly doesn't fit the new owner's plans. The tenant did nothing wrong. The building simply changed hands, and the new owner wants different tenants paying different rents. A few states now require a stated reason and a longer notice window, because lawmakers noticed how often this was pushing reliable long-term tenants out the door with no time to find anywhere comparable. Most places still don't have that protection. The tenant gets a letter, and the countdown starts. Number 6. Divorce or separation splitting one household into two. One household, one rent, or one mortgage payment. Two incomes covering it. Then the marriage ends, and what used to be one home now has to become two, on incomes that individually were never designed to cover a home on their own. The numbers here are stark. In the year a marriage ends, a woman's household income typically drops by close to 40%, and the chance of falling into poverty that same year jumps from roughly 1 in 14 to closer to 1 in 2. Women who divorce later in life, in their 50s or 60s, and don't remarry face some of the highest poverty rates of any group of women in the country. This one doesn't usually move in a single day, but it can move fast once the second household has to actually function on its own. The new, smaller place gets signed for with optimism. The first really tight month exposes how thin the margin actually is. For someone who was out of the workforce for years, or simply never the higher earner, that margin can collapse within weeks of the split becoming final. Number 5. Domestic violence forcing someone out with no plan. This is one of the most common pathways into homelessness for women in this country, and it's almost never planned. It's someone leaving in the middle of the night or the middle of an argument with whatever fits in a bag, because staying is more dangerous than leaving with nothing. Researchers who've surveyed homeless women have found that more than half named domestic violence as the main reason they lost their housing, and that number climbs higher among women who left with children. There's often no lease in the survivor's name, no separate bank account, no credit history of her own, because financial control is frequently part of the abuse itself. Shelters and protective orders exist, and they help. But a protective order doesn't come with an apartment attached to it. The legal system can remove the danger from a home faster than it can produce a new, safe place to live. In that gap, a lot of women and children end up in their car, a shelter, or nowhere at all. They got there not over months, but over a single bad night. Number 4. Losing a subsidy, voucher, or cosigner. A lot of people who are housed today are housed because of an arrangement that isn't entirely under their own control. A housing voucher that has to be renewed. A young person aging out of foster care who's been relying on a program with a hard cutoff date. A senior in subsidized housing whose program funding gets reduced and isn't guaranteed to renew at the same level every year. When any of these arrangements end, through no fault of the person living there, rent that was being covered, in whole or in part, by someone else simply stops being covered. The person now owes the full amount, on an income that was never built to handle the full amount, starting on a date they may have had very little warning about. There's no fire here, no eviction notice taped to a door, no ambulance. There's just a letter saying a program is ending, or a renewal wasn't approved, and a person whose housing was never quite as stable as it looked. Number 3. Property taxes or insurance outpacing a fixed income. Here's a situation a lot of people don't expect. A homeowner who paid off the mortgage years ago, no mortgage payment at all, the house is fully owned, still loses that house, not to a bank, to the county, or to an insurance bill that simply got too big to pay. Property taxes go up. Insurance premiums, especially in places exposed to fire, flood, or hurricanes, have climbed sharply in recent years, in some high-risk areas by hundreds of % in just a few years. A retiree on a fixed Social Security check has no way to make that check grow to match. The mortgage might be paid off, but the tax bill and the insurance bill are not optional. This pathway tends to move slower than most of the others on this list, building over a year or two. But the final stretch, the bill overdue, the grace period gone, the county or the insurer no longer waiting, can close in a matter of weeks. And it's uniquely painful because the person did the one thing everybody is told will protect them in retirement. They paid off the house. It still wasn't enough. Number 2, a medical emergency and the debt that follows it. A fall, a diagnosis, a hospital stay that runs longer than expected. Even with insurance, the bills that follow a serious medical event can be enormous, and the income that normally covers rent often stops at the exact same time because the person is too sick to work. A study published in early 2026 followed a large group of American adults over time and found something specific. People carrying medical debt were significantly more likely to experience housing instability the following year than people without it. Among people already experiencing homelessness, close to a third believe medical debt played some part in how they got there. What makes this pathway so dangerous is that it attacks from 2 directions at once. The bill itself is a new expense nobody budgeted for, and the underlying illness or injury is often also the reason income stopped. Rent doesn't care which direction the squeeze is coming from. It's still due on the first. This pathway can hit anyone: the careful saver, the responsible insurance buyer, the person who never missed a payment in their life. A body doesn't check anyone's credit score before it gets sick. Number 1, the death of a spouse, or the person whose income paid the rent. Of everything on this list, this is the one that can happen the fastest, and the one that's the hardest to see coming even when you know intellectually that it's coming for all of us, eventually. A couple has lived for 30 years on 2 incomes, or on 1 income and 1 Social Security check. One of them dies suddenly or after a long illness, and overnight the household is trying to cover the same rent, the same property taxes, the same insurance, with 1 check instead of 2, or a smaller survivor benefit instead of the full one. One real account described a widow whose household income dropped from over $100,000 a year to under $30,000 in a single day, simply because her husband passed away and his income went with him. For a caregiver who wasn't the one whose name was on the lease, someone who'd been living with and caring for a parent, for instance, the loss can be even more direct. The person they were caring for dies, and because the caregiver was never on the lease, they don't just lose a loved one, they lose their housing at the exact same moment, with nothing to bridge the gap. It's at the top of this list because it's the most universal of all 15. Every one of us either depends on someone or is depended on by someone. It doesn't discriminate by income, by neighborhood, or by how careful a person has been their entire life. And it can turn a stable 2-person household into a homeless individual in the time it takes to plan a funeral. So that's the list. 15 ways, and not one of them started with someone being careless, lazy, or irresponsible. A layoff, a rent increase, a car that breaks down, a frozen account, a few days in jail over a fine, getting asked to leave a relative's couch, an injury, a fire, a landlord selling the building, a divorce, a night fleeing violence, a voucher that didn't renew, the tax bill that finally outpaced a fixed income, a medical crisis, a death. All 15 share the same root we opened with. Most households don't have enough room to absorb a shock. Not a huge one. Just one. 10 days of cushion against a world that doesn't give 10 days of warning before most of these things happen. If you take one thing from this video, take this. The people walking past you in a parking lot, sleeping in their car outside a church, sitting in a shelter intake line, a meaningful number of them were exactly where you are right now. A few weeks before it happened to them, they had a lease, they had a job or a pension or a spouse whose income covered the gap. Then one specific thing happened, and the gap stopped being covered. That's not meant to frighten you. It's meant to make you a little more prepared and a little slower to judge the next person you see who's lost everything. Look at your own situation honestly. Do you know how many days you could go without income before rent became a problem? Do you know how much notice your state actually requires before an eviction can move forward? Is there one person you could call today if you suddenly needed somewhere to stay for a week? If you don't know the answers, that's the assignment from this video. Not to panic, just to find out. The real difference between the people who fall through one of these 15 doors and the people who don't isn't toughness or virtue or luck. It's whether they saw the door coming in time